Hi, everyone. Welcome to our November webinar. I'm really excited to have all of you online with us here today with Travis Mlakar from Millcraft. And Travis is the president of Millcraft, and he's been giving a presentation throughout the year to industry associations like ours on the state of the industry with regards to paper. So he's going to give us a nice kind of what's ahead. Millcraft is a paper merchant here in the US, and they serve the Ohio Valley area. So without further ado, I'd like to welcome Travis and turn everything over to him. Thank you so much, Travis, for joining us today.
Absolutely, Wendy. Thanks for having me. Everybody can hear me okay?
Perfect.
All right. I'm going to try to, as I told Wendy, this is usually about an hour long. So I'm going to try to jam it all into 30 minutes. And if I go too fast, I apologize. At the end, I'll leave you all with my contact information, try to answer any questions that you have. And certainly I'm available to you at any time if you have a follow-up. So I'll give you my personal cell phone and email and all that other jazz. So let's start off. Wendy did a nice job of introducing me. I'm Travis Mlakar, President and CEO of Millcraft. Millcraft, for those of you who don't know, we're a merchant headquartered in Cleveland, Ohio, been around since 1920. I'm the fourth generation of my family to be totally unemployable anywhere else. I've been doing this for, not including growing up as a janitor and working in our operations as a kid. I've been back about 20 years now running the business. I'm a former chairman of our trade association, the National Paper Trade Association. Sit on a number of environmental organizations boards, including Two Sides North America, for those of you that heard of that. And I do some strategic advising work for a couple of private equity companies that have been active in the space. So I still, with all that, I don't know that I'm qualified to look into the future. If I could read the future, I would have bought that Powerball ticket in California and probably not be peddling paper. But nonetheless, here I am. So I want to at least start with the end in mind. I'm a big believer in telling you up front kind of how we see things, and then I'll try to justify what we're seeing. So look, obviously all of us have been listening to the news. Interest rates are up. We believe that's going to slow down the economy. We think more importantly or more impactfully on the business. Given the nuance now where the majority of paper mills and several key merchants are owned by private equity, we think that rising interest rates are going to force people to look at working capital investments differently and try to manage those expenses and the interest associated with it. We know that some printers are currently overstocked and sitting on a lot of paper. I'll show you some of that. We believe that bubble of inventory probably is going to take about 90 days to work through the system. During that time, we expect a false lull in the system where purchasing activity will be below actual demand and consumption. And that's going to kind of back things up in the supply chain, which is both good and bad. But then we think that by the middle of February, that inventory bubble will have worked its way through and demand will start to pick up again. I'm going to walk through where we are on a supply perspective from the industry. We'll look at mostly uncoated free sheet as well as coated free sheet. I'm going to walk through some of the mill closures that have happened or have been announced and what the impact will be on the overall supply here in North America. And then we'll look at demand and we'll try to forecast a little bit of where we expect demand to be and then how does demand and supply kind of line up for 2023. I'll go through a couple cost pressures that are going to drive, I think, some of the pricing models that the mills will use, particularly freight challenges, fuel costs, energy costs, labor costs, some of those things, as well as some of the global economic issues that are at play that are probably driving some costs as well. And then we'll talk a little bit about what's going to happen perhaps in 2024 and 5 that you should be aware of and how that may impact the business as well. So as I said, let's start a little bit with interest rates. We all know that over the last 6 months, rates have gone up roughly 5% so far, with perhaps more to come. I think that this is, as I mentioned earlier, while interest rates are not where they were back in the 70s yet, as you can see on the graph on the left there, they have increased at the highest rate that we've seen interest rates go up in the last 40 years. So it is significant, and it is changing quickly how people need to manage their business. As I mentioned earlier, if you think back, 15 years ago, most of the paper mills were managed or owned publicly. Today, you've got Domtar that is privately held. You've got Finch that's privately held, Twin Rivers. You have basically the only one that's left, at least domestically. You've got Billerud now being owned overseas. Sappi is owned obviously publicly, but by a South African company. And you've got Sylvamo are really the publicly traded companies that are left with domestic capacity. Everybody else is privately held. So the private equity play will be to constantly reduce working capital and inventory. And so that will be something that we'll need to look at, because it will impact kind of how the supply chain operates and what you feel as there are pressures. As we look forward, obviously one of the questions is what's going to happen to the economy. And I think the interesting thing is we've seen all the news about layoffs and a pullback and everything else. And obviously looking at what kind of a recession we're heading into, if we could tell that, it may make my projection of demand decline, which is about 6%. That's in line with what RISI and PPC, which are two of the industry pundits that kind of track the industry. They're projecting about a 6% decline. So I'm going with them. I can give you enough reasons why I think they're overly pessimistic, and I'll give you some why I think they're probably overly optimistic. But one of the reasons that I think they may be slightly pessimistic is if you look at the bad news that's come out, what we've seen is a lot of it has been in the tech sector. We've seen a big pullback in the tech sector, YouTube, Alphabet, Microsoft, all of them talking about the decline in online ad market and ad revenues. The interesting thing for our business is that's all in the third quarter. But when you look at the only two kind of printers that I could find that are still publicly traded, you got Donnelly and you got Quad. And both of them came out with great third quarter earnings, and both double-digit increases year over year. So in stark contrast to what we're seeing in internet advertising. And it may be that a lot of the shift that's occurred is starting to plateau out, and we've gotten rid of some of the print that will go away. And perhaps what we're seeing is the resiliency in the direct mail side of the business and direct response, and how that may actually stay as we go forward, and may say that demand will not be as bad as some are projecting. It's interesting to note that while I will talk about a 6% projected decline, there's only 4 years where we've had a decline of greater than 6% over the last 20. It was 2008 and 2009 in the Great Recession. It was 2017 where we were down 7% in paper consumption. And then it was obviously during COVID, but that came back pretty quickly as we transitioned into signage and other things. But so we'll see how that plays out. One of the things that we're going to start to look at, though, is inventory. So this is a busy graph, but I want to kind of highlight two of the colors on here. So the first is the uncoated free sheet. That is the red line. I've kind of got a yellow arrow on the left side. So what that shows you is that graph is looking at the number of days of inventory that we have of uncoated free sheet. So you can see that back here before COVID, the industry was keeping about 30 to 35 days on the floor of uncoated free sheet. Today, we're down in the, we're down below 20, or down at 25. So we're significantly below where we were pre-COVID. There's still not a lot of inventory. When you look at coated free sheet, this is the purple line here, you can see it's even worse. So we were at a, call it 45-day level. We got up even before COVID. We got into the 60-day levels. We are below 25 days on coated free sheet right now, sitting on the floor. And this is as of the end of September. So still very, very tight in terms of inventory levels. and just not a lot to give yet. So it's important to realize that at least as of right now, we have not seen a mountain of inventory building at the mill level. Where we have seen it is at the printer level. So these are economic data. You can actually get this online from the St. Louis Federal Reserve. And what they look at is there's three graphs here. The first one looks at just overall print inventory in dollars. So this is the amount of inventory printers are sitting on. And what you can see is it's up by about 16% compared to where it was in 2018. Some of that is inflation, and some of that is we're busier. So if you look at WIP, that's what this middle or lower graph here is. It looks at WIP inventory kind of going back to 2018. So the WIP is up, and that's a portion of this growth in inventory. But then there's this third graph here, which really looks at a ratio of how much inventory are printers sitting on compared to print shipments. Prior to COVID, it averaged about 0.87. So that would amount to maybe 24 days of inventory that printers on average were keeping on their floor. And as of right now, while it's coming down a little bit, it's at 0.95. So it's up almost 20% if you look at that ratio. So we've gone from maybe 24 days to 31, 32 days of inventory. Doesn't sound like a lot, but when you think about the amount of print that's happening, you can see that a 20% increase can be pretty significant over the whole channel. And I don't think it's evenly distributed. What we're seeing is that certain firms are sitting on a lot more inventory and others haven't built inventory at all. So a lot of it depends on the business that you're in. Okay, so now let's go to the next. And this is a look at coated paper consumption. So this is where we'll start talking about a little bit about demand overall. So again, I'm going to look at the coated free sheet numbers here. And one of the things that I want you to look at is prior to COVID, this was our rate of decline, probably about 5%, 3 to 5% a year is a blanket statement that people would make. But what we've looked at is if we look at pre-COVID to now, we've seen a flattening out of the decline. And obviously it's been a couple of years. And so we're starting to see this flattening of decline. Maybe it's not declining as fast as it was. Maybe we've already transitioned out of the print that's being replaced with alternative media. And what's left, again, is maybe stickier. And you can even argue that you're starting to see, at least over the last year and a half, this uptick. Now, some of that is obviously as we come back online and businesses are reopening. Some of this has been the drive and the exuberance of what's going on the retail side, and some of this has been the election and the printing that's been fueling that. On the uncoated side, though, what's interesting is we're seeing the same thing. Again, the rate of decline prior to prior to COVID was kind of at this angle, much steeper, probably as much as I would say 5 to 7%, depending, as you had a lot of that statement work kind of replaced with e-bills and those types of things. But since then, we look at it, we've seen a flattening out of that curve, and even a growth a bit here over the last 12 to 18 months. Again, some of that was driven by ballot stock, some of it was driven by just the overall increase in the market. But nonetheless, we've seen it. It's not quite the decline that we've seen before. So all of that is good. And that would say to me that maybe a projection of 6% might be a little aggressive when you're only looking at 4 years over the last 20 that have been that bad. And they've been tied to very significant downturns in the economy. Again, 2008, 2009, 2017, and then actually the year of COVID when it hit. So that's number one. Now, number two, I want to talk about when I look back at the last few years, we've seen a lot of capacity come out. And I know that as we go forward, all of you have choices to make. And one of the things that I'm amazed at is that people and businesses don't always know where does everybody play overall in the industry. we've seen a lot of players go out. Appian, we've seen Appleton Paper, we've seen, there's been a whole bunch. Boise has shut down a bunch of capacity. Obviously, Billerud, when they were Verso, shut down a bunch of capacity. So I always think it's important for printers to understand who your partners are. And if you're, teamed up with a Domtar or a Sylvamo, you're talking about almost 50% of the market is tied up in those two players. If you're talking about somebody that's tied up with a, on the coated side, you've got two dominant domestic players in Billerud and Sappi, very different commitment level or where they are in the market than a Midwest Paper Group, which is formerly Appleton, which is now kind of the Phoenix coming out of the ashes again to see if they can make a go given where prices are. And I always believe that if you look at supply and demand and some of the choices that you all have to make in your business going forward, those are important things to recognize and understand. Where does everybody sit at the table? So I want to dig into uncoated free sheet. And we've done this for the last 18 months. And one of the feedbacks that we get is that folks don't like it when the mills or merchants say that the market's balanced because you haven't been able to get paper and it doesn't feel balanced. So let me see if we can walk through this kind of piece by piece, and then you all can make your own conclusions. So that far left bar here, this is the actual uncoated free sheet domestic capacity. So if I take all the paper machines in North America, US and Canada, and say, all right, if they ran full at 100%, how much paper could they make? That number is about 6.1 million tons a year. But just like in your businesses, they can't run full every day. They've got maintenance. They got to take some downtime. They're moving off of making one grade to another, and they've got downtime as they make that transition. And so one of the rules of thumb is that maybe their shipments to capacity is 94%. So if they're really running full, they're not running at 110% or 100%. They're running at about 94%. So that would say that you got to dial back that 6.1 million tons by about 6% or 367,000 tons. Then I look at, okay, well, what are the changes that have occurred? So Phoenix Paper, which is down in Kentucky, they recently did a rebuild on their machine last year. They've gained some added efficiency. It's about 25,000 tons a year. Then you had Pixel, which had a mill up in J, Maine. And many of you may have seen the YouTube video of the boiler exploding and the tragic accident that they had. And they shut that mill down, 230,000 tons that came out of the market. Now you've got Pixel that restarted a machine in their Chillicothe, Ohio operation. That's about 75,000 tons a year of additional capacity that they've brought online. Domtar has gained some efficiencies where with one of the machines that they brought back online mid last year in Ashtown, and that's about 60,000 tons of additional capacity. And then, as I mentioned, we've got a few mills that have restarted that were previously closed or making other grades, and now they're kind of coming back to say, hey, as long as pricing stays where it is, I might be able to make a run. And Midwest Paper Group is an example, and they're about 25,000 tons. So I add all that up, and that's about a 45,000 negative swing because of this closure of the Pixel mill in Maine. So that would give us what the domestic sources are. Then we got to look at what's coming in from overseas, and we got a lot of imports. The dollar's very strong right now. The US economy is doing better than certainly the Chinese economy or some of the Asian economies, and certainly better right now than Europe. So we've got a lot of imports coming into the United States. Imports have gone from about 600,000 tons. We expect them to be maybe 750,000 tons next year. So a 25% increase in imports up to 750,000 tons. Then I look at the amount that domestic mills export. So they still send paper to Mexico, and they still keep their toes in the water so that they've got some customers overseas in case our market ever tanks and they need those customers long term. That's small. It's only about 100,000 tons. And that would leave you with this number over here of 6,357,000 tons. And so that is the total supply of uncoated free sheet that we can expect to have in North America this year. So let's look a little bit now at demand. So if that's the total supply, it's like looking at my budget. If that's my income, what are my expenses? So on the consumption side, in 2022, if I add up all of the uncoated free sheet consumption by month over the trailing 12 months, it's about 6,650,000 tons. We saw that earlier when I showed you this graph of demand for uncoated free sheet. I was showing you the three arrows on it where we've got decline and then maybe a flattening out of that decline. You can see this is 7 million tons up here and this is 6. So we've been bumping around this mid-range, kind of slightly above, call it 6.6, 6.7 million tons. That was the demand last year. Now, if we factor in, what's your best guess, right? So if I go with RISI and PPC's forecast of a negative 6%, I'm just taking 6,650,000 times negative 6%. So 6% of that is about 399,000 tons. I would say we got 6.2 million tons of uncoated free sheet demand that we may have in 2023. So let's put it all together. We've got supply up here. We looked at 6,357,000 tons is what we expect the adjusted supply to be next year, including imports. Our demand is going to be 6,251,000 tons. It's right down here. So the gap between those two is 106,000 tons, okay, or 1%. So it's pretty small. That's the cushion. And so when you go back and you think about, so look, 100,000 tons is a lot of tons. But when you go think about where the industry is right now in terms of inventory and the fact that we have such low inventory days, and we probably need to stock some back, a lot of this over or under supply, in this case, oversupply, I think will be easily absorbed. The other thing to remember is you might be looking for 50-pound offset and the mills are making 60-pound or they're on opaque. And so it might feel tighter at a micro level than it will at a macro level based on what people are making. And so while this looks like, hey, there should be enough paper to satisfy our needs, you might find that every once in a while that they don't always line up exactly. So we think that would tell me that the market is going to remain fairly tight or balanced, right? Supply will equal demand. So let's look at it on the coated side. Coated's a little different. So coated free sheet, we've obviously lost a lot of domestic coated free sheet capacity. We're sitting right now, last year was about 2.2 million tons. Again, that's if they run full out. But as we talked about last time, they got to take downtime, they got machine maintenance. So that's about a 6% drawdown, 132,000 tons. On the coated side, we require a lot of imports in order to meet demand. So on the coated side, most of that is sheet fed, but growing into a lot more web is coming in. So normally this number is significantly below 900,000, but it looks like next year it could be 900,000 or 1 million tons. So let's say it's 900,000. That would be an all-time high. That would be the number of imports coming in. We still do export coated paper out of the United States. A lot goes to Mexico, but some goes to other markets as well, beyond Latin America. And so that would leave us with this kind of, end number of 2,768,000 of a total supply that the market has right now. So let's look again at the demand side. So I showed this slide earlier. Again, this was the one where we looked at the three different trajectories of those arrows. And we're looking at this purple line right here. So if you look, it's kind of right at this 3 million ton mark per year. That's the run rate that we've been on. So I actually went back, I added up all the months, and the actual number is 2,932,700 tons. So if that is where we're going to end up this year, that's our trailing 12 months, and we have a secular decline, just call it 6% decline next year because of a recession, because of continued substitution or whatever else it might be, it leaves us with a demand of 2,756,000 tons. So how does that balance out? Again, supply 2,768,000, demand 2,756,000. The gap is only 0.4% or 11,000 tons. Again, two major issues that you got to look at, and you may or may not agree with me, and the future may or may not agree with me. One is the amount of imports that are going to come into the United States. And number two is, what's going to be the decline year over year? Is it 6%? Is it 8%? Or is it 2%? Depending upon where that is, it's going to change these numbers dramatically. So we're looking at what the numbers would tell me is we're going to look at a very balanced market where I don't think it's going to feel as tight as it's felt. I think most people have kind of gotten into a groove of where are their sources of supply, and maybe some of the chaos in the Chinese fire drill has stopped. And so I think it will feel a little calmer, but I still feel that it will be, somewhat tight as we go forward. So let's talk a little bit about pricing. So if the market is balanced, our price is going to go up or our price is going to come down. I think our view is that prices will be stable for a significant period of time unless there's something that changes. Certainly if they end the war in the Ukraine, that would be worthy of a whole different analysis. But one of the issues we've got is domestic freight continues to be an issue. So diesel fuel in particular, while the load to truck ratio, those are these graphs over here, is starting to improve and get better and get back to normalized levels that feel a little easier. The problem is diesel prices are set to go up, have been going up, and will continue to go up. So they're up already in November. And one of the challenges that we have today is if you look at the strategic oil reserves, today we are at an all-time low in terms of the amount of strategic oil reserves that we have that we can put into the market to help keep prices down. So this is a slide that was on CNBC a few weeks ago that talks about, where were we the last time the inventory and the strategic oil reserves were at this level? It was 1951. We currently have 106 million barrels in the strategic oil reserve. It was 102, or it was in 1951, it was 102. We had half the population then, and our demand at that point was a quarter of what it is today. So in 1951, we were still sitting on 100 days when we had 100 million barrels, and today we're sitting on 25 days. So our ability to flex and manage, we kind of did that throughout the summer, and I'm not sure that there's a lot of blood left in the rock for us to use this lever to control diesel prices. So we believe as you head into the winter months, we're going to see diesel prices go back up. The other thing that could greatly impact diesel prices and domestic freight is there's this rail strike that I'm sure some of you have heard of that is out there. There are about 10 unions that have said they're on board, and we've got 2 unions that are a holdout. This is a big issue. If they decide that they are going to strike, it would be a massive issue because there aren't enough trucks to fill the gap of what is moved by rail. And so they've been working on this since July. The only one that can stop a strike by the rail lines is Congress. And given everything that's gone on, I don't know if Congress can all get together to agree on stopping a strike or not. I'm not making a political comment. I'm just making a comment about folks actually being on the same page on things. So that may be a challenge and certainly something to watch out for. And so the repercussions of that is what you've seen is last year, we all remember when you couldn't get anything and you got all these boats piled up at the ports. That's what's happening again. Boats are all moving from the West Coast port, and because they're worried about not being able to get freight on a train, they are moving the boats all the way through the Suez Canal. They're bringing them through the Panama Canal and around. It's adding about 13 days to a transit time. And now the volumes on the East Coast ports are spiking. So we're just kind of moving the problem around. So we're still very concerned about freight, particularly as we looked at when we're becoming more and more reliant on imports. It's one thing to get it to the ports, but then the challenge that we've all dealt with is how do you get it from the ports to wherever your operations may be? And this is a continued challenge. So for Millcraft, just put it in perspective, our mills are only delivering about 60% of our orders on time. And that's to all of our customers and to our floor. So it's still a serious issue and a major problem. So that would tell me that all the input costs, it's still going to be very heavy. It's still going to be hard to deal with. And then I look at, the news that has come out, and all of these announcements are in the last 3 or 4 weeks. We're still seeing increases. All of these happen to be companies from overseas, but APP has announced a price increase on all uncoated grades. Metza over in Europe, who produces board, they've announced an increase. And then Japan's Nippon Paper just announced an increase as well of 15 to 25% on graphic papers. So we're starting to see the input costs are catching up with, a lot of the suppliers. And please understand that even if inflation drops, what's not going to drop is, we don't think that energy costs in Europe are going to fix themselves anytime soon, that's a significant issue. We know that we've been talking about freight, the lack of truckers on the road will come down a little bit, but we don't believe it's going to come down significantly. Certainly labor costs aren't going to come down. I'm sure all of you are like us. We've had to address wage increases and everything else. And it's not like once, inflation starts coming back down that you're going to be able to go to your team and say, okay, now it's time to give that back. So there are now some structural changes that have occurred on the cost side. And in addition, it's important to note that for, in particular, the European manufacturers, which we're highly reliant on, energy costs are now equal to pulp costs in every ton of paper. It's never been that way, and that is a huge change. So you can imagine how sensitive they are to any change in pulp or any change in energy, and we'll see how that progresses here through the winter months. And then lastly, we haven't talked about demand. So we'll see what happens. Right now, there's a lot coming into the United States from Asians, particularly from South Korea, but also I look at Chinese imports into the United States or into North America. So there are trade tariffs in place in the United States, but the Chinese can bring product into Canada. They've gone from about 1,000 tons a month to 8,000 tons a month of coated paper into Canada. If China reopens its economy, if that economy gets going again, that increase of roughly 90,000 tons will be gone overnight because they will pull back and keep that in the domestic market. So we're also looking at what is the sensitivity to some of these importers and some of these sources of supply, given some changes that may or may not occur. So lots of uncertainty out there. And then just to make matters even more fun, this morning, Sappi announced a mill closure, or a mill conversion, I should say. They announced that they will be converting one of the paper machine number 2 at their Somerset facility over to SBS board. So their Spectro and Proto products, if you buy those. Essentially, that's going to happen in 2025. So Travis, why are you telling me about 2025? Well, because I think it's important that what you do in 2023 is going to have an impact on what happens in 2024. It's going to impact your allocations, and you need to be aware of what's going to transpire in 2024 and 2025, just so you know the ripple effects. So when Sappi converts that product over, or that machine over, it's going to be a reduction in basically lightweight web grades of about 240,000 tons. And then they will bring online a 520,000 ton board machine after they rebuild it. That's going to happen at the very beginning of 2025. So it's 2 years out. Billerud, on the other hand, had previously already announced that they're going to convert paper machine 4 at their Escanaba mill, which is 150,000 tons, in 2024. So next 1 year from January. So you got to think about the fact that this year there'll be 150,000 tons in the market for coated web that won't be there in 2024. So if I'm a web printer next October, I'm going to be very concerned if I'm buying a lot from off of PM4, just how is that going to look? Am I important to Billerud? Are they going to keep me whole when they move those tons to another machine? And you got to look at the fact that here we're sitting on a market, and we just said that, you know, the markets are going to be fairly balanced, particularly on the coated free sheet side. But we got almost 400,000 tons that are going to come out in 2 years. So even with declines, if we just layer in declines of 6% a year or 5% a year, we're talking about 267,000 tons of decline over the next 2 years when we got 400,000 tons coming out. So there will be an imbalance going forward. And that's why we believe that it's, you know, very important to align yourself with the right partners as you go forward, because you got to know what's going to happen. It's one thing if you're very important to a mill that closes their doors or closes a machine, you can be left in a world of hurt. And some of you have probably already felt that. I know we've felt it with some of the customers that we work with. And that's why we think that it's important to understand what's coming down the pike. So I'm 8 minutes over. So just to reiterate my kind of 10 conclusions, we think the interest rates are going to, you know, push people to look at their working capital, draw down inventory. We think it's going to put a somewhat of a damper on the growth that you've seen year over year, and that's why the 6%, you know, forecast we think is as good as any. We think there's going to be a soft or a false lull, and so our fear is everybody's going to look and think, oh, it's, you know, starting to get loose out there. I can go move my business, you know, to the person that's willing to give me the best price. Certainly can. I'm not going to tell anybody how to run their business, but we believe that the mills are going to reset allocations between January and June of this year, and that's going to dictate what allocations are going forward. And so we think being strategic in terms of the choices that you make and thinking long term is critical. We believe that that lull will be gone by March and things will start to get tight again. That could accelerate or decelerate. It could be February, it could be May, based on what happens from a recession perspective or what happens in other countries. And if China reopens their doors earlier or those types of things. We do view the market as being very balanced. We think, you know, all the numbers we look at and we try to pull apart, it would say that the demand right now that's out there is almost dead on with the supply that's out there, at least for this year. And as we've seen, we believe that more capacity closures will continue to happen and are already happening and already been announced. And we believe that there's more yet to come. You know, so we think that there's as much as 1 million tons of uncoated free sheet that could come out in the next 5 years. We're hoping not, but that's kind of what, you know, how we read the market. So I apologize, Wendy, for going over a bit, and I'm sorry for throwing at you all of that information as fast as I did. But as I said, hard to fit that all in 30 minutes.
No, thank you, Travis. That was an amazing presentation. It was so informative, and just even seeing the supply and demand economics to me was really eye-opening, and it gives some really good indicators for next year. So I'd like to open it up for Q&A now. The way we're going to do question and answer is you can actually go down at the bottom of your Zoom screen. There is a reactions button, and you can raise your hand. So if you want to raise your hand, if you don't have the ability to unmute yourself to ask a question, you can also put your question in the chat box. So we do have 2 ways that you can answer a question or ask questions. If you'd like to put your question in the chat box, or if you would like to raise your hand, go ahead and do so now. In the meantime, while everyone's thinking about questions, Travis, again, thank you so much for this really great presentation. And then I was just taking copious notes because it was some really good feedback. And you know, in terms of how printers strategically, you were saying printers tend to be holding on to some inventory. A lot of printers are kind of getting a bit of a stockpile in, a little bit more than maybe the 20 days or work in progress. What strategy are you recommending for printers for next year? What kind of inventory do you think they should be holding in your opinion, from your experience?
So it's a great question, and I think it's all dependent on the printer, the business that you have, who the merchants are that you're aligned with, and my push to everybody is the more transparent and open you are with your partners. Look, whether the inventory is on your floor, or a merchant's floor, or a mill's floor, the whole point is how do we begin to take costs out of the supply chain, and how do we find a way of optimizing the investment that all of us collectively are making. And so, we work with a lot of people where we've got, forecasts on supply. We agree on what we're carrying on the floor for them. We make sure that, we've got that based on their rolling forecast. We sit down regularly with them. Now, if you're right down the street from one of our locations, that number might be different than if you're, 250 miles away. If you're on an import program, the number that you need to carry might be different than you're on a domestic program. And so I think a lot of it depends, and it depends on your customers and their order pattern. So I wish I had an answer for you but I just encourage you to sit down and have an open conversation with folks and turn over all the cards. I'm amazed that people in our industry, we all still hold the cards close to our vest, and we all know that we're only holding a pair of twos. So I don't know why we're trying to, hold our cards so close to our vest.
Great, thank you. Looks like Terry Swade from Salem One has a question. Terry, go ahead and unmute yourself.
Hey, Travis. When you were saying about you believe the prices are going to kind of stabilize here going into next year, not knowing what's going to happen with diesel and all that, but have you seen any relationship, or you've done any cross relationship? Because you're saying that, Japan and them are looking at doing an increase. Have you ever done is the US in sync with them, or is it kind of independent? Or, do you see some of that spilling over as a global increase potentially?
Yeah, it's so we've looked at it. It's not pegged, and here's why. If the US doesn't go up, but the dollar does against the euro. So for instance, right now, the Europeans are getting 15% more shipping paper over here just because of the dollar to the euro conversion. So they've had a price increase without ever changing their price. In other cases then, but in Europe, they've got a massive energy problem that we don't have in the United States. So their costs are through the roof. European mills, many of them are not integrated, which adds a lot of cost. And then as pulp goes up, that really impacts them, whereas it doesn't impact most of the mills. Most of the sustainable mills in the United States are now integrated. So they're not as susceptible to the increases in pulp that maybe the Europeans are, or some of the Asians are. And that the Asian mills are very susceptible to pulp, particularly Indonesia and China, just because they don't have the fiber basket that other regions do. So the answer, Terry, is it's not that easy. I wish it was.
Great, Terry, great question. Thanks so much. Do we have any other questions out there? Just go ahead and hit that raise hand button, or you can type something in the chat. And Travis, just for the sake of everyone understanding a little bit about what Millcraft does, can you tell us a little bit about the types of papers that you're working in predominantly? What segments of the printing industry do you really do you really sell through your merchant facility there?
Yeah, so primarily we work with everybody. We work with a lot of commercial print shops. We do book publishing. We're in the web world. We do a lot with programs where we're putting together in conjunction with our print partners. They may have end user programs that we're working to support. We do a lot of forms bond and carbonless and that kind of stuff. So kind of across the board, we run the gamut.
Okay, great. Thank you. We got a question here on the chat. It's a direct message to me from Michael. Why do you feel that Sappi is converting a machine to SBS board stock? What is driving that demand? Terrific presentation, he said.
So it's a great question. And here's the fundamental challenge that the mills are all in. So if you have 2 million tons, let's say coated, 2 million tons of demand right now, right? And if demand drops 5% a year, that's 100,000 tons of demand that evaporates every year. So if you're Sappi and you're sitting on, as you go back and look at the pie chart, Sappi's a major player. And if they're sitting on, 1 million tons of capacity and it's dropping at 100,000 tons, the question is, what are you going to fill that up with? And so they're looking at it and saying, well, over 3 years, it's 300,000 tons. That's more than a machine. So who's going to take a machine out? And so instead of just mothballing a machine, which has happened, somebody like Sappi is saying, all right, what grades do we think are going to grow? And they're looking at the packaging market and the SBS, and they're saying, all right, we think that's going to grow. We think that there'll be this replacement of plastic with paper on the packaging side. So that's a market for us. We think we can flex that machine now into making, paper plates and paper cup stock and those kinds of things. And so it gives them some flexibility and then allows them to kind of manage as the business is declining. And for Sappi, they've also got operations over in Europe. And so they can also draw on capacity out of Europe and import tons that they're making in Europe to satisfy domestic demand. Some of the smaller mills can't do that.
Great. Excellent question. Thank you so much, Travis.
Mhm.
I know we want to try and keep it to 45 or 50 minutes today. Are there any other questions from our participants? So it looks like, so everyone, just so you know, you can contact Travis. His contact information is here on the screen. Please do not hesitate to reach out to him. I know he did mention he'd be happy to answer your questions and speak with you about your demands and your needs for next year. So without further ado, I'll go ahead and close this out. For everyone that is here, if you did want to replay it or you wanted someone in your office to see this presentation, I am going to be posting this on our Graphic Arts Alliance website and actually on our YouTube channel. So you can go to YouTube and look up Graphic Arts Alliance and you will find this presentation by tomorrow. So thank you all for coming. Travis, thank you so much for an amazing presentation. We're really grateful. Wishing you all a wonderful Thanksgiving in the next 2 weeks, and stay tuned for more presentations coming from Graphic Arts Alliance. Thank you and have a wonderful day.
Thank you.